All right, hey everybody, TG Watkins here of simplertrading.com, and if you guys want to come check out my newsletter and anything Moxie related, you can come over here to profitpilot.com. And today we're going to be talking about what's going on in the market. So we're going to be over here at StockCharts.com TV. And the first place we need to start with are the overall indexes. Now, we're starting to see quite a bit of difference between the various indices, and I think it's going to be a little bit telling of where the strength is, where the weakness is, and kind of what's going on at the market. So if we look at the S&P, which actually happens to be kind of in the middle of the middle of the road, basically, is that with the monthly weekly chart, I will note that on the monthly chart, we have been running outside of the third ATR for, well, quite some time. And we've seen that at some point when they get too far, it does want to pull back to the monthly 10. And we are seeing that there is a bit of a gap between price and the monthly 10. So based on these time frames, the S&P might be a little bit overbought, and this could turn into something else. You know, we're kind of seeing price kind of chopping around in here and not getting too much momentum to the upside. Other times, if we look at the weekly chart, that we've seen price pull back to, say, the weekly 50 and through here, or the weekly 21 and the weekly 21, and we just did a double bottom off of the weekly 21. You know, we do see price as it finds support usually continue on up to the upside. But what we're starting to see is a little bit of a struggle for price to get going. Now, remember kind of the environment that we're in. We're seeing interest rate hikes starting. We know that there should be at least 3 in 2022. The Fed just came out and said, well, those rate hikes are probably going to happen sooner than expected or sooner than later, which when you kind of think about it, it's like 3 rate hikes over the course of the year, you divide that by 12 months, like, well, they were going to have to kind of get started pretty soon anyway if they were going to do them in call it equal intervals. But if they're going to start those right away, seems kind of the Wall Street is throwing a little bit of a hissy fit about it. Inflation, we've got all this kind of stuff going on. Also, they are starting to pull back on their bond purchases, so we've got quantitative tightening going on. So we've got a lot of headwinds going on. As far as the weekly chart, we've been talking about the weekly 21 here, and we did get a little bit maybe overbought here on the weekly chart, a little bit off of the weekly 8, but we are back down to the weekly 8. So it's kind of tough to say that anything's really terrible right now on the weekly chart. And then if we come over here to the daily and the hourly, the only thing that looks really rough is the hourly time frame. I love to see price stay above the hourly 50, and even if it takes little dips below it, that's fine. But this move is pretty significant. That's a big move down based on the news that came out with the Fed and everything. On the daily chart, again, from the surface, not looking too bad. It is just back at the daily 50. We've seen this happen before. We did even get one really big move below the daily 50, but that actually turned out to be a double bottom. You can see here, double bottom, positive divergence on the hourly chart. This is how I use the Moxie indicator. And then, from last week, the Moxie indicator had fired over zero, so fired green, and we were looking good. We were making new all-time highs on the S&P. And then we get that news, and it pulls back hard. So, to be real straightforward and honest, we were looking at things looking pretty bullish and looking fairly strong. But then today and yesterday, with the market moving down like this, it maybe it throws a little cold water on the party and a little bit of a question out there. So we just need more time to kind of figure this out. One of the ways that I look at it is that so far price has only fallen through the hourly 50. A lot of times in order to confirm a downtrend, we want to see price get rejected by those moving averages, and that hasn't happened yet. There's still a fairly big gap between price and the hourly 50, and we do still have a fairly large distance or gap between the daily 8 and the daily 21. So this looks like kind of the first move down, and I would imagine we will be seeing some sort of bounce. And the question is, what happens after that bounce? That's always the question, because the first move is kind of the first move. Then we see a bounce, and does that bounce continue to be bullish, or does that bounce actually run into resistance? And that's the confirmation of topping pattern or something moving down. So we don't have enough information at this moment to figure that out. So that's kind of what we're seeing with the S&P. If we go over to the NASDAQ, it is having a little bit harder time because of the interest rate hike because tech tends to suffer a little bit in these conditions. It too has been, I mean, it's been just a beast. It's been run outside of that 30 ATR for quite some time on the monthly, but it's closer to the monthly 10, so it's closer to support. And on the weekly chart, the weekly 21 has also been support for quite some time. Now, we need to keep an eye on is something changing? Is this starting to erode the strength of the weekly 21? As I said earlier, just a minute ago, the NASDAQ is looking a little bit weaker than the S&P. And if we look at this on a daily chart, yeah, it is not, I mean, look at this. It is right back down to this low area on the daily chart. It is below the daily 50. Even the Moxie indicator was giving us a little bit of a heads up that the NASDAQ was not as strong as the S&P. So that's an issue because the Moxie indicator being below zero despite price being over the 50, that's an issue. That's what I call an inverse trampoline move. And basically that is a false long. And it's telling you that momentum and energy is lagging price, and so that was a concern. We did see also a double bottom and some positive divergence, just like the S&P, but the NASDAQ, when it broke down pretty handily and strongly down like that. So NASDAQ showing relative weakness compared to the S&P. Now, then we go over to the well, actually, let me talk about the Dow, because if we show the Dow compared to these three other ones, and I want to talk about this mostly because the Dow is actually looking stronger as far as relative strength or relative weakness. It is contained within the third ATR on the monthly chart, so that's good. It means it's not overbought, and it is right here at the monthly 10, so that's good. Now, it hasn't cared as much about the weekly 21, so fine. But if it wants to care more about the weekly 50, then okay, fine. Whatever moving average it prefers. And you can see here that generally speaking, it is also at new highs and holding up. If we take that and we compare it to, say, the daily chart, zoom in a little bit here in the hourly chart, well, it has not fallen apart nearly as much as the S&P or the NASDAQ. A little bit of move down here, and that was all from a peak up here on the daily chart and the hourly chart. Now, the Moxie indicator, while it has not crossed over zero on the daily chart yet, it does seem likely it wants to keep moving up. It has not put in a red bar yet on the daily chart. And the hourly, the Moxie indicator is still above zero, which the S&P and the NASDAQ don't have. So yeah, relative strength in the Dow, and we can see it here with the daily 8 and 21 also. I mean, price is still over and far away from the daily 21. Now, this can all change, but for now, it's the relatively strong one. So we kind of look at that and say, well, bigger, older name kind of stocks are doing well, and industrials and precious metals and some of those other stuff that we'll be going through. Now, if we come over here to the small caps, we look at the Russell. Basically, this is the risk on or the risk off index, and we're definitely seeing a move to risk off. So something I've been telling my subscribers, if you guys want to get more information, but over at profitpilot.com, that's where you can sign up about the Moxie alerts and all that. I've been talking about this, that ever since we had that false breakout, this has been a different story. We were looking at everything pretty good coming into the weekly 50, coming into the monthly 10. We had the 8 over the 21. Everything was looking good. We finally got this move up. That was great. And I was looking for just a little bit of a pullback into support here, and when that pullback never actually stopped pulling back, it just blew right through support. I never was able to find an entry because it just kept going down like this, and that really changed the whole story and the whole narrative when it comes to the IWM. So now we are underneath the weekly 50. The 8 is below the 21. This is not looking great. The price is below the monthly 10, all of that. And then if we come over here to the daily chart and hourly chart, notice we are now, instead of being over the daily 50, we are underneath, or sorry, instead of being over the daily 200, we are below the daily 200, and instead of being generally over the daily 50, we now just actually ran right smack into the underside of a downtrending daily 50. That's resistance. So this is what I was just talking about with the S&P earlier, is this is now confirming the daily 50 as resistance with that Moxie indicator below zero. And in through here, I was basically just expecting price to fall off at the hourly 50 at some point. So this has been fairly clear to the downside and to the short side. So not necessarily that the small caps are going to lead the market to the downside, but it is something to really be aware of, that where is money flowing? It is definitely not flowing into the risk on stuff. It's not flowing into companies that need to borrow a lot of money in order to keep afloat. It's not flowing into companies that have to, the pie in the sky type companies that, okay, we're still trying to get our company up and running. We're still, we're a big dream type company that's out there. No, money is going to the old blue chip type stocks, stocks that pay dividends, stocks that aren't going to go away, stocks that during inflationary periods or during recessions or during tough times, the money's going to be flowing into those areas to where they can basically hide out. That's what I'm seeing. And so keep that in mind for wherever you guys are going to be looking for trying to put some money, or if you just want to put your money into cash, or you can be trading short. There are a lot of shorts that are happening out there, so do keep that in mind. So some of the stuff that we're going to be talking about, trying to find where that money is going. Speaking of the industrials, if you go over here, let's go over to Cat and Caterpillar, and Deere. If you zoom out a little bit on this, they've been having a little bit of a struggle, mostly because they've just been going sideways for so long, but they never quite fell apart. So Caterpillar here was a little bit worse off than Deere. You can see here that price did flag right into the underside of a daily 50, downtrending daily 50, and you can see the Moxie indicator was below zero, so that was telling me that was an inverse trampoline move. So, as we go through this stuff, I like to tell you what's going on with the market and what's happening and kind of what I'm seeing with trends and, maybe some actionable stuff. But really the whole point of this also is to show you the kind of trading that I do and how I use the Moxie indicator and why this has really benefited my kind of trading. So, part of this is just going to be an educational standpoint too, of where, hey, I want you guys to be aware of this, that if you do decide to pick up the indicator or you're just looking for something else to help you with your trading, that this is a tool that I've designed and developed that really helps me with my trading and gave me basically some guidance, some rails to understand where the market is going to be going based on momentum and energy, and that's what the indicator tells us. So when the Moxie indicator is below zero, that's negative energy. And so it's to help you not get suckered into a move like this where you see price getting over the daily 50. You're like, great, that's awesome, because price over the 50, we can go long, we can buy it. No, that's not the case. And the Moxie indicator helps tell you that, because that's, by the rules that I've established, is an inverse trampoline move, and price should not be over the 50 if the Moxie indicator is below zero. And you can see that same situation right here. Price was over the 50, but notice that the Moxie indicator was close, but it was not over zero yet. It wasn't until we started to see this double bottom, positive divergence. There's the Moxie price trigger. That means the indicator is now positive, and then you can see here price holding the daily 50 and starting to move up. So I had kind of been looking at Caterpillar and DEs kind of left for dead, because they were just so slow and not doing much that I just didn't think much was going to happen. Not until recently that these rules and these trade setups that I see, that I talk about all the time, actually started showing up in Caterpillar and Deere. I mean, look at this. This was picture perfect. There's your double bottom, there's your positive divergence, and there is your flag into an uptrending hourly 50 with the Moxie indicator above zero. I mean, that's textbook for the Moxie indicator and the Moxie rules and everything that I do. So pretty interesting that we're starting to see this show up in these two names. Now here's Deere, and let this kind of load, and we can see basically the same thing. Here, not to get suckered into this, because this is an inverse trampoline move. The Moxie indicator was telling you, like, hey, I understand the price is over the 50, and sure, maybe you can take some quick moves, but as far as a longer term trend and a swing trend, this isn't going to work out, because price over the 50, but the Moxie indicator still below zero. That's not the correct setup. And you could even see here again, price was trying to get over the daily 50, but the indicator was still below zero. It wasn't until finally price kind of pulled back here, and then finally price held with some positive divergence, and now the indicator's positive. And you can see here, double bottom, positive divergence, and then price just shot up. So this is pretty interesting to see that these are the areas that are getting some strength when the rest of the market's looking fairly rough. As far as Deere, I wouldn't really want to purchase it right here. I'd love to see just a little bit of a pullback, maybe down here into the hourly 50 of some sort like that. And then if we want to look at some other sectors and areas, FCX is to name one of them, basically copper, where we've been seeing some strength in this. Even if I zoom out, let's go over here to the monthly and the weekly, these charts are looking fairly good. Pulled back into the monthly 10, you can see just bounced right off of the monthly 10, pulled back into the weekly 50, bounced right off of the weekly 50, and now they're just trying to figure out if they're going to keep going higher. So far, the Moxie indicator looks pretty good on the weekly chart. And if we come over here to the daily and just zoom in a little bit, again, with the Moxie rules, I mean, what is it? This is right here is a trampoline move. Price below the 50, but the Moxie indicator above 0 is telling you that energy and momentum is still positive. That's why the indicator is still over 0. So when price then moves below that moving average, it's in a place that it shouldn't be. And this is what I call a high pressure, high buoyancy type trade. This is where I originated the style of trading with this as far as the trampoline moves. I mean, you can say it's just came in here, jumped into the trampoline of the 50 and then jumped back out. And it's just the opposite of the inverse trampoline move. So far that's working and looking pretty good. Yes, of course, almost everything has been pulling back over the last 2 days based on that Fed news. But if I look at this, I'd have to say that for now this is still bullish. It could be really choppy and erratic. I mean, we've been seeing that kind of stuff from these sector type names. But generally speaking, the daily 50 is in an uptrend. We have the 8 or the 21. The Moxie indicator is higher. The hourly 200 is angled up, and this should be a trampoline move on the hourly. So yeah, it's going to be a little bit tough making sure we can hang on to some of this stuff if it's going to be moving up. But if you guys can trade long only, then that's what we're looking at. XLP is another area, another sector, usually very, very defensive. And while it has been on a pretty steady uptrend like this for quite some time, it's just not some place that a lot of us tend to operate in because it's so slow. The thing I want to note is that as of recently, look at that monthly and then look at this weekly chart where it is starting to explode and make new all-time highs in a pretty obvious way. So money is trying to rotate someplace and hide out someplace during these turbulent times, and you can see right here that it bounced right off of the monthly 10 and then basically bounced right off of the weekly 50 and through there. If we take a look at that down here on the daily and the hourly, there have been some pretty decent setups. So right here, basically, I like to look at that as a double bottom area. There's your positive divergence, and then a nice little flag right there, and that's where price started to take off. On the hourly chart, look at this great combination. Look at this great combination of moves in through here. Let me get this resituated. There we go. And so what we can see is this was an inverse trampoline move. Price over the 50, but the Moxie indicator below 0. That's telling you that's a false move to the upside. That's the indicator's trying to help you not get suckered into a long move like that. But then when you see price move up like that, pull back into an uptrending moving average with the Moxie indicator above 0, there's your Moxie price trigger firing. Boom, there's your trade. That's the nice trend. And then the continuation is the regular trampoline move right there. And then you can see here as price continues to bounce off of the hourly 50 and keep looking strong. Now, it's looking a little bit overbought at this point in time. I will say that, so not exactly a place that I would recommend buying right here, but it is a strong sector, so do look for pullbacks into support, opportunities to get into this. We are starting to see some negative divergence like that, and it really is just pretty high up. So just be smart about where you want to buy into something that, even though it is on a nice trend, you don't really want to be buying at the extremes or the extensions to the high side of those trends. Some of the other areas that I'm seeing, again, going with the whole safety aspect, we're looking at SBLK, and on the SBLK, we're seeing a lot of shippers, transports, marine shipping, all that kind of stuff, trucking. They actually seem to be doing pretty well. And they have been taking quite a few weeks of sideways movement because they did have some pretty big moves back and through here. So they need to rest a little bit. And that's what we're seeing here is they're just flagging sideways, resting. And at least for StarBulk, you can see it's come right into the monthly 10 here and then come right into the weekly 50. The whole time the weekly 8 is over the 21, so still remaining its bullish configurations. And then we kind of zoom out here. Let's look at the daily and the hourly. And StarBulk, I mean, it is right here. Look at this. it's almost, or can't tell right now, made new highs. A little bit of a tang up there, but looking really, really good as it comes into and does a double bottom off of the daily 200. The Moxie indicator's back above zero. I mean, everything is looking pretty good on this stuff. So I'd be looking for generally these kind of shippers to trade sideways a little bit further until they find some strength and actually want to break out, kind of like XLP broke out. Along with that, I've been seeing a lot of people talk about the metals, and I don't mean precious metals, I'm talking about steels. If we look at NUE, let me come over here and look at NUE. Nucor is one that's been getting talked about quite a bit. And you can see it looks very similar to StarBulk, to where price has just been flagging sideways after its fairly good run, but flagging right into the monthly 10, trying to find that support. And on the weekly chart, not so close to the weekly 50, but so far the 8 is still over the 21, and this consolidation, as long as it resolves to the upside, should look pretty good. I will add the caveat that this market can do anything, especially if it's going to get worse. But if money is still looking for places to hide out, and they're going to be looking at those last vestiges of some strength to the upside, then something like this is looking fairly decent. And if you come over here and look at the daily and hourly, as of the other day, it was looking pretty good because price was flagging right into the daily 50 and then popped up. Now, it got a little overbought. Like, we could see that just because of the distance between price and the hourly 50. And so at this point, with the news and with this pullback, we're just going to have to wait and see if this continues to be strength on the hourly. Same thing with the daily. Is daily 50 and daily 8 or the 21, is that going to continue to be strength? And then in order for this really to confirm, we're going to need to see the Moxie indicator cross over zero and keep moving to the upside. So as you can see, there have been a lot of good names still moving out there. There is still opportunity, but boy, it's been a little bit challenging because news like what came out just the other day has been throwing the whole market for a bit of a headache for what's going on. So you get these up moves and get these down moves, and it's just all over the place. So maybe zoom out a little bit more, try and figure out what the overall greater picture is, and then just make sure that if you're trying to be bullish and look on the long side, stay on the long side with those trends and make sure that you have the moving averages correct in your favor. Otherwise, if you're going to be trading maybe the small caps and some beta companies like Roku or Zoom kind of come to mind, maybe even Peloton, if you're going to be trading these things to the short side, that might be the way to do it if you can trade that direction. Now, just keep in mind that even the stock that has been totally down and beaten up can have really, really big pops. I think my buddy was just telling me GameStop may not be able to see it here, but he was telling me it was up $30 in the overnight. So just keep in mind that even in down moves, that sometimes you will get some really, really big pops to the upside. So some of the biggest moves to the upside are in bear markets and are on stocks that are going down. So it's a weird way to kind of play, but that I do find that the downside has some its own challenges, so to speak. So, all right, well, we'll just kind of leave it off at that. It is a very cautionary tone to the market. Keep in mind, industrials seem to be where things are going. Money's trying to hide in someplace safe, and we're going to be, if you guys have any questions about who I am, where the Moxie indicator can be found, how I trade, and some of the education I put out, you can come over here to profitpilot.com. And if you want the indicator on StockCharts, you just go over to StockCharts.com and search Moxie, and we've got some good deals for you. All right, everyone, thanks again, and I will talk to you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.